The lows on Bitcoin got swept, so is it time to bounce or will we continue further to the downside? In this video we'll go over the key confluences I'll be tracking moving forward and how I plan to position myself. So on Monday we've seen Bitcoin sweeping the lows at $76.6 thousand, triggering all of the stop losses sitting there. So what actual impact does this bring to the markets? So moving to a post I made about 2 weeks ago in which I said that the manipulation in crypto is obvious at this point, and I know you see it too, and that prices seem to be suppressed while governments, states and big players keep accumulating. Now, one tactic I've seen market makers using is setting up liquidity levels and liquidity traps. And I know this is a thesis I've covered many times before, but I do think it carries a deep impact on the price action, as we'll cover in a few minutes as well. And so every liquidation cascade has been preceded by a series of higher lows. And I've spotted this pattern before, and it's helped me hedge just in time. Back in late February, back in early March, these are two of the most recent examples that I used. And essentially what they do is they create an artificial counterparty by building marginal higher lows, making traders set their stop losses right at the nearest lows, then triggering all of them through an event or some news which act as a counterparty for the market makers that want to accumulate. So back here we were around $86,000, right with all of these liquidity levels sitting below us. And now moving once again back to the charts, we see that all of these liquidity levels have been tapped, sweeping the last low at $76.6 thousand on Monday with all of the tariff fears, all of the recessionary fears and so forth. So this is something we've seen throughout all of these months. And essentially we have this series of untapped lows that is developing on lower time frames, which then is triggered by a tariff announcement. There comes the question on what's going to happen moving forward. And my expectations are that on a short-term basis, at least, we have bottomed. And I think it will be worth tracking whether Bitcoin will form another series of marginal higher lows like we've seen before, which will precede the next leg down once again. Or if this was indeed the bottom that precedes the actual reversal to the upside. And once again, I explained how a healthy market structure should look like. In my opinion, a lot of people got really excited at these levels, but we didn't have any sort of confirmation to be bullish about. We didn't have any sort of breakout, right? And the same happened here once again at these levels. A confirmation of a breakout would have been break above the prior breakdown point at $88.8 thousand, which we didn't have. Instead, we had this rejection, which was then followed by this capitulation wick under the $76.6 thousand lows. And so I believe that right now we need to see an impulsive market structure. If Bitcoin continues to form this series of marginal higher lows, and then once again starts chopping at these levels, failing to break above the prior breakdown point, then low time frames will get bearish once again, and we need to be cautious at these levels to position ourselves for another potential leg down. This is what I've done over the last couple of months. For the people that follow me on a close basis already know that each time I've tracked these series of higher lows that have developed on low time frames, then I hedged myself, and that allowed me to keep accumulating at lower entries. Once again, this is something that we need to adapt to. I'm not comfortable doing this. I'm not comfortable being bearish on low time frames. My personal bias is to be bullish on high time frames, but this is the reality that we have to adapt to. And until something changes, until we have structural shifts in the market or we have variables changing to the market, I don't think that the outcome will be any different. And so moving forward, what I would like to see is an impulsive market structure. So how would an impulsive market structure look like? Well, we have the initial wave one, which is the initial impulse up, and then instead of forming the bottom right away and then moving on higher, we have a deeper pullback. Similar to this, we have the initial wave one, and then we have an ABC sweeping these lows and not letting any liquidity form below the current levels, and then bouncing on higher. So this would be how an impulsive market structure will look like. and then once again an ABC sweeping these lows and then bouncing on higher. Instead, over the last couple of months, what we've seen is the bottom forms right away. We don't have a deep pullback, right? Right here, this impulse up should have been like this. Then a corrective ABC, then a bounce on higher. Instead, the price bottomed right away, then moved up. Then the next correction didn't sweep these lows. Then this correction didn't sweep these lows. Then this correction swept these lows but failed to sweep these lows. And so more and more liquidity levels build below the current levels, which eventually lead to this liquidation cascade. And this is a thesis I've covered many times before. This is something that has happened over the last couple of months. This wasn't something unexpected. These are my current thoughts on the current market structure on Bitcoin. So what I'll track moving forward is whether Bitcoin succeeds to have a healthy market structure moving forward. Now, from an Elliott wave standpoint, I think that this coincides with our last corrective wave C out of a major corrective wave 5. So what does this mean is that we had this initial dump back in January and early February as an initial corrective wave 1. Then we had this consolidation phase back in mid-February, which coincides with wave 2. Then the strongest corrective wave 3. Then once again a bounce higher as a wave 4, which was this rising wedge on the lower time frames that we've covered before. And now it seems like we have a completed corrective wave 5. We had the initial corrective wave A, then the wave B, and then the last corrective wave C. So right now I think it makes a whole lot of sense to bottom in this high time frame demand zone, which coincides with the prior March highs, as we've seen before, and the price tapped into this range, then bounced on higher. So right now on the lower time frames, something I'll track moving forward is whether we'll get another leg lower into this high time frame demand range and then bounce on higher, or whether this was the actual bottom and from here this is pretty much an impulse up. And once again, I think that moving forward it will be worth paying attention to the market structure that will develop on the lower time frames. Once again, if we fail to break above the prior breakdown level, which currently is this one at $88.6 thousand, if we fail to break above this one and Bitcoin struggles quite a bit when testing this range, then we form something like this. Maybe we have some liquidity levels sitting below us and so forth. Then I think we risk seeing once again another leg lower, which is why we need to hedge ourselves right here. And I don't think we can be irrationally bullish on the lower time frames until something changes, right? I don't think that until we have a durable structural shift, we can actually get bullish on the lower time frames. Yes, once certain support ranges get tested, we can get bullish on the lower time frames, but once the price then approaches some resistance levels, some supply ranges, then we once again need to start being cautious until there is an actual confirmation that the trend has shifted. Since January, since we started this downtrend, Bitcoin has failed to form even a single higher high, as we've seen Bitcoin relentlessly forming lower highs each time, failing to break above the prior breakdown level. And you might think that aren't these higher highs? Isn't this a series of higher highs and higher lows confirming that the trend has shifted? Now there's a difference between an external market structure and an internal one. So here, this series of higher highs and higher lows was between these two levels. So between the $92.6 thousand level and between the $76.6 thousand level. Now, this price action was in between an external market structure. So we can name this an internal market structure due to the fact that it is between two main levels. And a break either below or above one of these key levels would be an actual external market structure, or what we call an extended break-off structure. Now, since Bitcoin formed yet another lower low, it doesn't confirm an extended break-off structure due to the fact that this is the actual market structure that we've seen over the last couple of months, in which Bitcoin forms a lower low each time. So this just continues it. An extended break-off structure of this trend would actually be a higher low that develops, and with an extended break-off structure above the prior breakdown point, it would confirm both the higher low as well as the higher high, which would act as a structural shift on the high time frames. So this is something that is worth tracking moving forward, and this is something I'll pay attention to. Now, looking at the high time frame perspective, what I would like to emphasize is the fact that I think this period leads to essentially a short-term pain for long-term gain scenario, in which there's a lot of short-term pain, there's a lot of frustration right now, but all of this leads to a more healthy and durable rally moving forward. And as we've seen over the last couple of months, there has been this same pattern that has played out over and over again. So there is this sweep of the lows, then this sweep quickly gets retraced as a lot of buy pressure comes in. Then once again there is a sweep of the lows, then the breakdown continues. Once a key support level gets tested, then the price bounces once again and that buy pressure comes in. Then this just repeats, and we have the same process over and over again as we see accumulation on the lower time frames by using the liquidity coming from the stop losses. And this has been my thesis. I've covered it at the beginning of this video, that this is how market makers use retail as a counterparty and force out sell pressure coming from retail, from leverage positions, from perpetual markets, from their stop losses and so forth in order to accumulate. Now, as I covered in one of my latest videos regarding a potential macro catalyst, I think that the end of quantitative tightening will change things moving forward. With that, this has been my video for today. If you enjoy the content, please make sure to give this video a thumbs up and make sure to subscribe to the channel so you never miss out on future updates like this. Thank you all for watching, and I'll see you guys in the next one.